Yeah, today I'm going to discuss about the homework part of the course Taxation Accounting Business 585 offered by CALMAT, California. What we're going to discuss today is the assignment for the homework chapter 1 and chapter 2. My name is Darren Tay, and I'm under Professor Samuel Tong. The chapter 1 assignment is, let me read through the questions. Compare the benefits of a 4,000 deduction and a 4,000 tax credit for two single taxpayers, one with taxable income of 40,000 and the other with taxable income of 200,000. In this homework, we're going to use the tax rates listed on page 12 of textbooks. Okay. So the answer for this assignment, chapter 1, is, as you can see, let's say the individual, the taxable income is 40,000 with no adjustment and no credit. He or she has a tax due $5,802.50. We try to compare with the 4,000 deduction versus the 4,000 tax credit. As you can see that the 4,000 deduction, the tax due is come down to $5,022.50. The 4,000 taxable credit, it helps to reduce the tax due down to $1,802.50. As you can see, the example here is the tax credit. It does help to reduce the tax due by more than $3,000 in this example. Now let's see the next example. We talk about the if this individual, single individual, has a taxable income of 200,000. He or she will have a tax due about $48,430.50. Okay, with no adjustment and with no credit, no tax credit. Now we try to compare, let's say, with 4,000 deduction versus 4,000 tax credit. As you can see, 4,000 deduction, the tax due come down to $47,310.50. On the other hand, the tax credit for this individual will have a tax due about $44,430.50. Once again, as you can see, the tax credit, it does help to reduce the tax due. Next questions is from chapter 2. What are a statute of limitation to a taxpayer? According to what we learned from the book, the statute of limitation is the period of time beyond which legal action or changes to the tax return cannot be made by the taxpayer. Okay. The general statute of limitations is 3 years from the date of return is filed or its due date, whichever is later. There are some exceptions to the general 3-year statute of limitation. For example, if a taxpayer inadvertently, omit gross income in excess of 25% of the gross income reported, then the statute of limitations will increase to 6 years. And last and not least, in this statute of limitation that we're going to discuss, let's say somebody filing a fraudulent return, that will trigger unlimited period. And that's what they call, that is no statute of limitation for fraud. the US government can bring charges of fraud against a taxpayer at any time. But of course, the proof is on IRS to prove that the return filing was fraudulent. This is the end of discussion for the homework for the week 1 and week 2. Thank you.